In this video, we are going to look the basic terminology of accounts. Things like element of accounts, component of financial statement, and who actually uses them. So let's start with the elements of accounting, where we have income, expenses, assets, equity, and liabilities.
The entire world of accounting basically starts and ends with these 5 elements.
And along the way, I also introduced debit and credit. Now, let's dig into it. Income. So, what is income? Income is basically the money or benefit you earn over time. It could be from your work, businesses, or investments. For example, your salary from a job, profit from a business, rent from a property, or interest and dividends from investments. Here's the thing, income comes in two types, operating and non-operating. Operating income from your main business activities and non-operating income from your other activities. Both varies business to businesses. Expenses. Now let's talk about expenses. Expenses are the money you spend to run your life or your business. For example, salaries, rent or housing cost, electricity, water, internet bills, and other businesses cost. Just like income, expenses also have two types, like operating expenses and non-operating expenses. Operating expenses for core activities, and non-operating expenses for other things. Let's move to assets. Now, what is assets? A present economic resources controlled by the entity as a result of past events. Its definition itself says three different meanings. Let's break the definition. First, present economic resources. This just means it has value today and it can be help the businesses in future. Maybe it helps earn money, save cost, and support operations. Now controlled by the entity. Here's the thing, the businesses must actually control it, not just use it temporarily. It should be able to decide how it is used, and also keep away from other like to using it. And finally, as the result of past event, this is simple, the asset should come from the something that has already happened, not something you plan to do. For example, if you brought equipment last year, that's an asset. But if you are planning to buy an equipment next month, that's not an asset yet. Assets are divided into two categories and also two types, which called as tangible and non-tangible. And the category is current assets and non-current assets. Current asset used within 12-month cycle and non-current asset used for more than 12-month cycles. Now the next is equity, or you can say equity. Equity is what's left residual after you subtract liability from assets. In short, it's the owner's shares in the businesses. We can write it as equity is equal to asset minus liabilities. For example, money invested by the owner and profit kept in the businesses. Let's understand liability. What is liability? A present obligation of an entity to transfer an economic resources as a result of past events. Similarly, like assets, liability says three different meaning too. So, what are the liabilities? Think of them as what a business owes. In a simple terms, it's a responsibility. The business has the right now to give something valuable to someone else. Liabilities are basically your obligations today, created by past transaction, where you now have to pay or transfer values. Let's break it down. Present obligation. This means the duty exists right now. It's not an optional. You can't ignore it. It could be legal like a loan, or even based on a promises like a payment you have committed to. Now, to transfer economic resources, here's the thing, you will have to give something valuable, usually money, but it could be other sources too. And then as a result of past events. So this obligation comes from something that has already happened. For example, you took a loan, now you must repay it. You bought goods on credit, now you must pay for them. That's it. Some common examples like loan, bills to pay, salary owed, taxes payable, and liability are also split into two types: current liability and non-current liability. Current liability to be paid within 12 month cycle, similarly like an asset 12 month cycle, and non-current liability to be paid after 12 month cycle.